Let's talk about soybeans, tiny protein-packed nuggets that once fueled the American agricultural engine. For decades, the formula was simple: grow soybeans, sell them to China, and watch the profits roll in. States like Iowa and Illinois built their economies around this dependable partnership. But in 2025, everything changed. A new trade war erupted, and China slapped heavy tariffs on American soybeans, making them nearly unsellable. The result? A market collapse that left farmers with mountains of unsold beans and no way out. Farmers who invested in land and equipment, betting on China's demand, now face financial ruin. The infrastructure, grain elevators, shipping ports, was built for a trade route that suddenly closed. This isn't just a tariff dispute, it's a full-blown crisis. Costs for fertilizer and fuel are rising while new non-tariff barriers make trade even harder. China hasn't just closed the door, they've changed the locks. American farmers are left stranded, watching their livelihoods evaporate. The soybean dream has unraveled, replaced by uncertainty and economic pain. The question now: can America's heartland survive this seismic shift? When your biggest customer vanishes, disaster follows, and that's exactly what hit the U.S. soybean industry. In April 2025, China hiked tariffs to 34%, instantly killing demand for American soybeans. Exports to China, once worth $24 billion, dropped to almost zero. The financial fallout? U.S. agricultural exports to China plunged by $6.8 billion, a 73% nosedive. For soybean farmers, losses are catastrophic: $5.7 billion in vanished sales, with more to come as harvest peaks. Silos overflow, prices collapse, and farmers face the prospect of losing everything. The domestic surplus drives prices even lower, compounding the pain. In September, China imported zero U.S. soybeans for the first time in 7 years. The message is clear: America's agricultural dominance is over. While politicians argue, farmers watch their livelihoods disappear. The soybean, once a symbol of strength, is now a casualty of global politics. The industry faces a multi-billion-dollar hole with no easy fix. For many, this is an existential crisis. So, where did China turn? Straight to Brazil. As U.S. exports collapsed, Brazil soared, filling China's demand almost overnight. In 2025, Brazil produced a record 170 million tons of soybeans, with 80% headed to China. Brazil didn't just fill the gap, it became the new, global, soybean powerhouse. Argentina joined in, boosting exports by 21% thanks to government incentives. South America now dominates China's soybean supply, leaving the U.S. sidelined. This isn't a temporary fix. China is locking in long-term contracts and investing in South American infrastructure. The U.S. spent decades building trust with China, but that market share is gone. Every new deal in Brazil cements America's decline. China has proven it can live without U.S. soybeans, and Brazil is happy to oblige. The global soybean map has been redrawn. For American farmers, the loss may be permanent. If this sounds familiar, it should. History is repeating itself, only worse. In 2018, a similar trade war with China devastated U.S. soybean exports, costing $9.2 billion and triggering government bailouts. But 2025 is a sequel with higher stakes. China now uses not just tariffs, but also non-tariff barriers, inspections, licensing delays to block U.S. soybeans. Meanwhile, farmers face soaring input costs, leaving them with razor-thin margins even before losing China. The 2018 crisis was a warning. This is a knockout blow. Even before this, China was already diversifying its suppliers. The U.S. share of China's soybean market fell from nearly 50% in 2012 to just 27% by 2024. The trade war only accelerated this trend. China is systematically reducing its reliance on American agriculture. The golden era of U.S.-China soybean trade is over. For American farmers, the verdict is final. The market they once dominated is gone. The lesson: diversify or disappear. As exports vanish, American farmers face another crisis: skyrocketing costs. Fertilizer prices are up 16 to 39% since January 2025, a massive hit for a critical input. Labor costs have jumped 47% since 2020, making it harder to find and keep workers. To make matters worse, a new 10% tariff on Canadian fertilizer adds to the pain. Profit margins are being crushed, especially for small and mid-sized family farms. Many are forced into debt, delaying investments and falling behind competitors. The result is a vicious cycle: less investment, less competitiveness, more financial stress. Even if the trade war ended tomorrow, U.S. farmers would struggle to compete with Brazil's lower costs. The U.S. is pricing itself out of its own market. This isn't just a temporary setback, it's a structural crisis. The backbone of rural America is at risk. Farmers are being squeezed from every direction. Survival is no longer guaranteed. Brazil's soybean boom comes at a steep environmental cost. To meet China's demand, vast areas of the Amazon are being cleared for cultivation. Every ship of soybeans carries an unseen price-lost rainforest, lost biodiversity, and displaced indigenous communities. The 2025 crisis has only accelerated deforestation, as regulations are ignored in the rush for profit. The world's appetite for cheap soy is fueling climate change and destroying vital ecosystems. China's food security comes at the planet's expense. The true cost of this trade war is environmental devastation. The soybean crisis is as much about the future of the Amazon as it is about economics. This crisis is about more than soybeans, it's about power. China has used trade as a weapon, shifting supply chains and sidelining the U.S. Decades of American market building have been erased in months. China is forging new alliances with Brazil and Argentina, excluding the U.S. from the future of global agriculture. Even if a deal is struck, the old relationship is gone. American farmers must adapt, diversify crops, find new markets, or risk extinction. The lesson is clear. Relying on a single volatile market is dangerous. Global supply chains are fragile, and politics can shatter them overnight. For U.S. farmers, the cost of this geopolitical chess match is painfully real. The question now, can they recover? Or is this the end of the American soybean era?